Why would you want to buy the dollar? No, you don't want the dollar. You want to get rid of the dollar. This is going to happen. But the strength of the dollar is keeping gold from exploding. That's why gold is 1900. Gold was down about 10, 12 bucks today. It should be a lot higher than 2000, and it will be.
Welcome to Peter Schiff's insightful analysis of the current state of the bond market and the looming economic challenges. In this video, Peter discusses the awakening of the bond vigilantes, the impact of inflation, and the critical connection between bonds, the dollar, and the price of gold. Join us as we delve into the forces shaping our financial landscape and explore the impending shifts in the global economy.
Every day we're getting closer to a major stock market crash or a financial crisis or both. And I think the only thing that might derail this in the short run, of course, nothing is going to derail it in the long run. This crisis is inevitable and will happen. But Powell is going to have to come out and do something drastic to change this narrative. Otherwise, this is going to happen. And, whether it's tomorrow, the next day, the next week, it's hard to tell. But what seems apparent to me is that we're about to go over a cliff. Just don't know how much, more distance there is between where we are now and the edge of that cliff. But we're going there. And what's going to push us over the edge is the rise in interest rates, the collapse in bond prices, which is continuing relentlessly. Now, this is not something that should be a surprise to any of my podcast listeners. I have been warning about this not only in recent podcasts, but over the last several years, that this was going to happen, that interest rates were going to rise a lot more than the markets were prepared for. Not only rise a lot more, but stay higher for a lot longer. And that is what we're seeing now in the bond market. Bonds now are at their highest yields since before the 2008 financial crisis. If you look at the yield today on a 30-year Treasury, it closed at 4.7%. Now, that's still a very low yield, but again, we haven't had yields this high since the 2008 financial crisis. The yield on the 10-year is 4.56. Now, we're getting very close to 5%, which is still a low rate. But most people might not recognize this, but the last time the 10-year Treasury yielded more than 5%, it was 2001. And the yield got to like 5.2 or 5.3, so it barely got above 5%. We are almost there. Now, there's a big difference because back in 2001, I think the national debt was 7-8 trillion. Now it's 33 trillion. We have a lot more debt now than we had back then. So this is a much bigger problem, a 5% 10-year. I mean, we're not there yet, but at the rate we're going, we will be there soon. And what nobody seems to appreciate in the financial media is they are looking at the beginning of the end of this whole phony economy, because the economy is built on a foundation of cheap money. It's not just the economy, it's every facet of it. The government, the deficits, the government budget is built on cheap money. And it's not just the federal government that's been gorging on this cheap money. A lot of the state governments, municipalities, they've all issued a tremendous amount of debt. Oil was up again today. Oil is back to almost $91 a barrel. And this is with the dollar going up, right? Oil is still going up. And stocks, the Dow is down 400 points today. NASDAQ, an even bigger drop, down about 1.5%. And oil still went up. Imagine what's going to happen to oil if we get a bounce in the stock market. If the dollar falls, oil's going to just go straight up. We're going to go through 100. Oil prices are not going to stop going up because inflation has driven them up. Meanwhile, we can't sell any more oil from the Strategic Petroleum Reserve. In fact, they need to buy oil to refill the reserve. And they're going to have to buy it back at a higher price than they sold. It's going to be a lousy trade. The American public is going to get stuck with a loss. Now, maybe they won't even buy it back for a while. They'll just watch the price go up before they have to try to buy some of that oil back. But you can't cut rates. The markets don't get this. Yes, the Fed slashed rates to zero in 2009. In fact, it slashed from the 1% in 2001 after the financial crisis. It slashed them to zero in 2008, and then again in 2020 with COVID. Everybody expects, okay, the Fed's going to slash rates to zero again. They can't do that this time. The only reason they got away with it is because inflation, the way it's measured, was under 2%. And Powell could say, well, we can print more money, we can do QE to stimulate the economy because we're underneath our inflation target. And since we need to get the inflation rate up to 2%, we can do this because now we kill two birds with one stone. We stimulate the economy, plus we push up the inflation rate so that we can get to our target. So quantitative easing, stimulus, the Fed conceded that those policies would push the inflation rate up because that's what they claimed they wanted. They wanted higher inflation. So that was the justification. But if we have a crisis now, if the markets crash and if banks start failing, but the inflation doesn't come down, how do you justify cutting rates? You can't. Why would you want to buy the dollar? No, you don't want the dollar. You want to get rid of the dollar. This is going to happen. But the strength of the dollar is keeping gold from exploding. That's why gold is 1900. Gold was down about 10, 12 bucks today. It should be a lot higher than 2000, and it will be once the markets come to their senses. Gold should be going up with oil. Right? Oil is black gold. Gold is yellow gold. They should both be going up. They normally have more of a positive correlation. Eventually, gold and oil are going to trade in the same direction. And the dollar and bonds are going to trade in the same direction, down. The dollar should be falling. And when the dollar is falling, that is going to accelerate this problem. The fact that the dollar is rising is cushioning the blow right now. Things will be a lot worse once the dollar starts to fall, especially for the bond market. Once people start dumping their bonds and their dollars, then we're going to see this slow motion crash turn into a normal motion crash. It was initially called BitGold, right? And it was going to be like PayPal with gold. It was exactly what I wanted to help, get people on the gold standard, their personal gold standard. Is what I was trying to do with my bank, but I never got that off the ground. So when I found out about gold money and I met with these guys and they had their vision, I wanted to be a part of it. I wanted to help make it happen. And so I thought a way that I can take advantage of that was to sell them my gold company and then just be part of gold money. I got a bunch of stock, I got a bunch of warrants, and I was out there promoting gold money. The problem was the regulators wouldn't let it happen. It's not like they just gave up on this dream. The government killed it for good reason, because they hated competition. They imposed such draconian regulations on gold money that it became completely uneconomically feasible to effect these transactions, to make it possible for the average guy to use gold as money. Now, without the government regulations, it was very easy to do. The free market has a perfect solution to enable gold to be used as money. The government is what prevented it from happening. And because of the onerous regulations that were imposed from Canada, not even the United States, from Canada on gold money, they had to give up on everything they wanted to do. And so they ended up just being a company that sold gold and stored it, which wasn't anything new or innovative. A lot of companies did that. But and more recently, they've been doing some other things with the company. They've been buying real estate and other ways to hedge inflation and find different ways to invest their cash flow and build a portfolio. But it seemed like they kind of were moving in a direction that it wasn't something that I really was excited to be a part of, because it wasn't the original vision. And I think they looked at Schiff Gold, because the original reason that I even came to Gold Money was they were more interested in me promoting Gold Money than owning Schiff Gold. Schiff Gold was kind of just a way to get me in the door so that I can promote Gold Money.
Thank you for tuning in to Peter Schiff's analysis on the bond market, inflation, and the future of the dollar and gold. If you found this video informative and thought-provoking, please like, share, and subscribe for more in-depth insights into the world of finance and economics. Stay tuned as we continue to navigate these complex financial waters together. Your support means a lot. And remember, wise investing starts with understanding the forces at play. Until next time, stay informed and stay ahead of the curve.